2023 economic pressures could punish sports card prices, but it might not be for the reason that you're thinking. We will dive in a little bit deeper here. Stick around. Hello to all my sports card collectors, investors, all of my collectibles friends. It is a two-a-day today, guys. It's double time. I was off the last few days. I had the flu. I'm finally getting back over it. Finally getting back with it? I don't know. Anyway, I'm struggling a little bit today. I'm probably at about 87, 88%.
Are you all right, man? I think so. How about now?
But I'm here for you. If you're looking for that almost daily sports card collectibles content, hit that subscribe button down below. Also connect with me on IG where I share a lot of my pickups. And I'm also a member of Elon Musk's Twitter, the Sports Card Dad. Big shout out to today's sponsor, Drip Marketplace. Gotta check them out, guys. Live streaming app. They've got comic books, sports cards, non-sports, culture cards, Yu-Gi-Oh, all the different things. A lot of different variety on the Drip platform. Very, very cool. Definitely check it out. I will put a link in the video description as well as a pinned comment with a link to give you $15 off your first purchase. So definitely check it out. Hey, who doesn't need 15 bucks? All right, guys, we end 2022 and enter into 2023 with economic uncertainty in the U.S. and globally, frankly. We had the new CPI report that came out today with some good news. It showed inflation at 7.1%, down from 7.7% in October, November 7.1%. So improvement there, but the Fed wants to be at 2%. So to think that we're done with Fed rate hikes, I would say that's a no. And so what's expected to happen here in the next few days is another half-point rate hike, which is significant based on the fact that they've already raised them so much. Now, historically, are we at some crazy high federal fund rate? No, we're not. But it's just the fact that they've done it in such a quick way. I mean, this has happened very, very quickly. If we look at the average mortgage rate right now, according to bankrate.com, the national average is sitting at 6.64%, which is almost twice as high as it was just 18 months ago. So borrowing money is becoming more and more expensive, and it's not slowing down, at least not yet. Now, there is a lot of speculation that as we get into 2023, that they're going to really kind of slow to a halt, maybe after the first quarter. So we get through February, March, and then we get things down into maybe, 5% inflation. Then there's pressures to like, hey, let's just chill this thing out. We don't want to have 9% mortgage rates, etc. But we will have to see. I mean, we don't have any control over that, and they might not bend to political pressure. It might be that they just continue to apply pressure. Unemployment, while it has been affected to some degree, still the job market holding pretty strong. And so the Fed is looking at that. They want to put pressure on the job market, which sounds a little bit crazy. I know people are like, wait, you want me to lose my job? But essentially, they want to put pressure. They think that there are just more jobs than needed, essentially, that there's more jobs than there are people. And so they're trying to put pressure on all of it to see what they can do to curb this inflation. And so cash is king again. So how does this affect sports card prices? How could it affect it? The answer might kind of surprise you. I think that it's just going to be opportunity cost. If we're looking at these assets that are continually just getting pressure put on them by the federal fund rate, whether we're talking about the stock market, real estate, crypto going even lower than it is before, there's a lot of different options. If you do have disposable income, it's going to be like, wow, am I able to buy, the stock market will be the first I think a lot of people will look at. Does the stock market start to move downward? And if that's the case, then I think a lot of people are going to, look at that and say, okay, do I want to put money in cards this month, or do I want to put money in these companies? Similarly with real estate, if you're someone that's been looking to get into, different real estate investments, well, real estate's been really high, for a while. The stock market has been really high, really going for years. It's been high. So even though we kind of, we put money in through our retirement accounts and whatever, does it feel great buying companies at all all-time highs or just about? Not really. And I understand if we're just taking a long-term horizon, you're not trying to time the market, but still, even if you're not trying to time the market, you understand if you're buying companies at inflated prices, that's not really fun. The same way it's not fun to buy sports cards or real estate or whatever that thing is. You're still buying high, essentially. And granted, I mean, maybe the Dow Jones is 100,000 in 30 years or whatever, but still, I mean, the main point is that assets have been very, very high given the very, very low, historically low interest rate environment that we've been in. And now we've done kind of a complete 180. And so what will the opportunity cost be in 2023? Will stocks slide to where a lot of people say, oh, I'm going to move money out of cards and I'm moving money into companies, or real estate slides, mortgage rates going up typically has an inverse reaction to pricing. If the mortgage rate is high, it stops people from being able to afford that level. It's got an inverse reaction. And so if people can't afford that price for that rate, then people have to bring prices down if they were going to sell. Now, what also could happen is people just don't bring the prices down. If they don't necessarily need to sell specific assets, then they just sit on it. And I guess that's what people would call kind of the stagflation environment, where it's just stagnant because nothing's really moving. And we talk about this in the card market. In the card market, oh man, no one wants to move off of their prices. Well, they're probably just like, hey, I don't really need the money. I'm okay just sitting on it. I actually do like the cards, so I don't need to sell. And then there's going to be others that do need to sell. And it's all going to just be dependent on each individual circumstances. But again, what are people going to prioritize in 2023? If they do have disposable income, they're looking to invest in particular areas, and it might be cards. Of course, there's going to be a certain segment. And also, I think for me, especially, I'm always going to continue to buy cards, but it does make it tougher if stocks slide down. If the Dow Jones goes to 15,000, real estate tanks, then you have to look and say like, well, should we be moving funds, moving resources into other spots? So I don't know. It's an interesting debate, but that's what I think is going to be kind of tricky as we move into 2023. There is kind of this, recession fear that's out there. There's a lot of economists and different folks that are talking about, hey, we're going to have a recession in the next 6 months, 12 months, 24 months. I know a lot of people will say like, hey, we've already been in a recession. And I guess if you're looking at kind of negative growth over 2 quarters, we have technically been in one, but the piece that's really not been affected yet is unemployment. The unemployment rate really hasn't popped up, and that's typically part of a deep recession, kind of a recession in general. So that's what we have to watch for in 2023. But then there are others that think, hey, this could kind of just be a speed bump. In other words, the Fed is going to continue to raise rates, but after that first quarter, they see some good signs, and all of a sudden they chill it, they slow it down, maybe they don't raise rates at all, or maybe they even lower rates a little bit, and then that gives people consumer confidence. Okay, we're going back to the way things were, which we may or may not be, but the main point is if there is kind of confidence in that, and that we're kind of turning away from higher interest rates, then maybe people are a little bit more bullish on markets. So it's going to be fun to watch whether we're talking about sports cards, collectibles, or really any of these asset classes. So what is your strategy as we head into 2023? Have you thought about this? If we go into kind of really a huge bear market in some of these other asset classes, are you moving? Are you going somewhere else? Or are you staying all in cards, or still buying cards, but also dabbling in some of the other stuff? And that's probably where I land, is always going to be buying cards. But man, if there are some great opportunities, whether it be in the stock market, real estate market, or whatever, I think that those have to be looked at as well, or at least considered. Anyway, let me know your thoughts, guys. Stay healthy, stay awesome, and I will talk to you again later.